Hey there, and welcome back to Trades, Trends, and Takes. I am your host, Kyle. Today's date is August 22nd, 2024. Indexes are trading downward today for no particular reason, possibly a risk-off event pending upcoming events tomorrow, which leads me into a reminder that Jackson Hole is taking place, and I talked about that briefly in my video yesterday. It's taking place in the morning. Jerome Powell will be talking before market opens, so be on the lookout for that. And he could be making some market-moving statements. Goldman Sachs says the central bank's chairman could still surprise investors despite their confidence in the Fed's path for the rest of the year regarding interest rate cuts and how many they're going to do and how much we will be cutting by the end of 2024. In 2022, when inflation was hitting a 40-year high, Powell delivered a short but direct 8-minute speech that reinforced the Fed's path to raising interest rates to combat inflation, even though the stock market was in the middle of a painful bear market already. Bond yields surged and the S&P 500 lost nearly 8% in the week after Powell's hawkish Jackson Hole speech. This is quoted from Goldman Sachs, looking back, referencing the 2022 speech that Jerome Powell held at Jackson Hole Symposium when he attended then, and is just emphasizing on what type of possible movement we might be looking at here. Now, of course, Goldman Sachs doesn't want to say anything about 2023. 2023 did not have nearly the same amount of movement, only 2 or 3 percentage points at best, and then it continued to trend the way it was trending. So I don't want to put too much weight on that. I don't know if I necessarily am going to believe that we're going to get an 8% move here in the upcoming week. If we can break all-time highs, though, then if the momentum is good, then sure, I suppose that's certainly possible. I don't know if I would attribute that to Powell's comments at Jackson Hole Symposium alone. I think there will be other factors that will come into play on that. Inflation is down to 2.9%, and that is the lowest it has been since early 2021. We're definitely on the right path, don't get me wrong there, but inflation for the last 14 months has not been all that much higher, hanging around the low to mid 3%, while we are slightly trending down again, letting up on rates here. There is a risk that inflation ticks back up, and I think Jerome knows that. He obviously is aware of that, even in spite of all of the very recent changes to employment data. I was talking yesterday about how the department or the Bureau of Labor Statistics came out and said, yeah, we actually, those numbers that we've been producing for the last 12 months or so, they've been significantly off. They've been off by over 30% darn near, and which is hundreds of thousands of jobs. So if the job data has not been correct this whole time and inflation is stagnating a little bit, I don't know if the Fed is going to feel too confident just yet in that they can start cutting rates and not have inflation start to rise up again. Because if it starts to rise up again, then the Fed really has a problem. Because then they're going to have to talk about raising rates again. That conversation will come back onto the table 4, 5, 6 months from now when inflation is back to 3.2, 3.3%. And we're still dealing with unemployment ticking up a little bit. We're still dealing with issues with the job market. But the Fed has to tread lightly here. And I do not envy the Fed. This is not an easy job. Because if they don't lower rates, it's almost impossible to tell whether lowering rates now or cutting rates now is at the right moment that will help out the market just enough so that we don't go into a deep recession or start looking at a hard landing versus a soft landing and end up inadvertently doing more damage and then having to lower rates even more, right? I think the end goal, though the Fed has not really described this, is not to have interest rates go all the way back down to 0.25%, right? I think the end goal is to have interest rates maybe around 1.5%, 2%, a reasonable, steady level, so that in the event of hardship, rates can go lower, or in the event that the economy is doing really just absolutely fantastic and really blowing up out of control, then we can go up a little bit and reel it back in and keep it on a more sustainable path. Because we know the problem of having interest rates at 0.25% is that you have no flexibility, you have no legroom to do anything with. So the moment that there starts to be a problem with the system, well, then the Fed has to go and just load it on their balance sheet and start buying bonds and assets by the tens, if not hundreds of billions of dollars. And that's not doing anything positive for the economy either. So that is coming up real quick here. At the time of recording, it's approaching almost less than 12 hours away. So I won't even continue to speculate. Let's just hang tight. We will see what happens in the morning, and I will report on that tomorrow. Ticker PTON, Peloton stock surged by over 35% today after the company reported better than expected fourth quarter earnings and revenue. The jump was fueled by strong performance in their connected fitness segment, which showed significant revenue growth. Additionally, Peloton's new launched Bike Plus rental program in the UK exceeded expectations, contributing to investor optimism. The company's results are seen as a positive sign of progress in its ongoing turnaround efforts. Investors may even be rewarding Peloton stock also because it has lowered debt by some $200 million, and their average maturity has been extended to 2029 for some of their remaining debt. Now, Peloton's all-time high clocks in at about $171 a share, currently trading at about $4.55. They have quite a ways to go to make up that negative 97% movement from their all-time highs. I'm not investing in Peloton. I just found that news interesting for today. They really moved pretty largely on even a little bit of optimism that they're able to turn around some of their balance sheet towards the positive. Gap, the clothing brand, turns 55 today, marking the anniversary of the opening of the brand's original store on Ocean Avenue in San Francisco. To observe the occasion, the company will change from its original New York Stock Exchange ticker symbol GPS finally to GAP. So they have acquired their ticker symbol that matches their company name. Good for them, I suppose. Gap will report its Q2 2024 financial results on August 29th. During Q1 2024, which ended in May, Gap reported net sales of $3.4 billion, an increase of 3% year over year. They reported net sales of $14.9 billion during the fiscal year of 2023. Where I think really attention is needing to be diverted to, though, is approaching Nvidia earnings. They are coming up at the end of the month here, and it could be what kicks off another round of AI investing mania, currently trading at $124 a share. At first glance, it appears to be making lower highs on larger time frames, but if we get a bullish move next week or tomorrow for indexes, and then Nvidia has great earnings on top of that, we could see this company rocket to all-time highs again, and that would probably also re-secure its spot as the #1 most valuable company by market cap. And I've said this previously, it held that #1 position so briefly that I think that was not the last time that we are going to see it there. There was just a good bit of profit taking. We're even seeing in headlines that the CEO is selling some $14 million or so in shares a day. But if I was an investor in Nvidia, I would not let that faze me at all. I think this company just has so much strong momentum behind it. It has very much of that kind of Tesla-esque feeling in the air to it that Tesla had when they were just ripping up constantly through all-time highs, even after post-splits. So I think the energy is still there. I think the momentum is still strong. I am not in the stock. I more and more, I think I would like to be, especially if it's approaching all-time highs again. So I might even be looking to get into a position here soon. But currently, at least in my channel's kind of experimental trading account, I am tied in other positions with Carvana and Dollar General, which have not been moving a whole lot this week, nor have indexes. So we will just have to continue to monitor that situation there. Again, though, I don't think we have seen the end of Nvidia. I don't think it's headed down towards lower digits from here, at least not at the moment. So thank you so much for watching. Please consider liking and subscribing. I will see you all tomorrow. I have another video coming out here this afternoon very shortly of my 3-month YouTube channel recap. So if you're interested in that, go and check that out. Thank you again for watching, and I'll see you soon.